When it comes to managing taxes, the rich often have an advantage. It's not just about how much money they make, but about how they manage and minimize their tax burden through strategic planning. While many people feel overwhelmed by taxes, wealthy individuals take a proactive approach, using various strategies to keep their financial obligations to a minimum. In this video, we will explore the top 10 things that rich people do differently with their taxes, offering valuable insights into the strategies that can help anyone improve their financial situation. 1. They take advantage of tax-deferred accounts. One of the most effective ways the wealthy reduce their taxable income is by contributing to tax-deferred accounts, such as 401ks or IRAs. These accounts allow individuals to defer paying taxes on the money they contribute until it is withdrawn in retirement. The rich often maximize their contributions to these accounts, allowing their investments to grow without the burden of taxes in the short term. This helps them accumulate wealth more efficiently while paying less in taxes in the process. 2. They utilize tax-efficient investment strategies. Wealthy individuals often invest in tax-efficient assets, such as municipal bonds, which generate tax-free income. By focusing on tax-efficient investments, they can reduce the impact of taxes on their returns. Additionally, they may use tax loss harvesting strategies, selling investments at a loss to offset taxable gains. These methods are a way to maximize investment returns while minimizing the tax burden on those returns, which is a key difference between average investors and the wealthy. 3. They take advantage of capital gains tax rates. Unlike ordinary income, which is taxed at a higher rate, long-term capital gains, from assets held for more than a year, are taxed at a lower rate. Wealthy individuals are often strategic about holding onto their investments long enough to qualify for the lower capital gains tax rates. This can save them a significant amount of money compared to those who frequently trade investments and incur higher short-term capital gains taxes. 4. They use tax-advantaged accounts for healthcare. Many rich individuals take full advantage of health savings accounts, HSAs, and flexible spending accounts, FSAs, which allow for pre-tax contributions to be used for medical expenses. These accounts not only reduce taxable income but also provide a means to cover health costs in a tax-efficient way. Since HSAs offer triple tax benefits, contributions are tax-deductible, earnings grow tax-free, and withdrawals for medical expenses are tax-free. They are particularly popular among the wealthy for both short-term and long-term financial planning. 5. They leverage charitable contributions. Charitable giving is another powerful tool for reducing taxable income. Wealthy individuals often donate significant amounts to charity, and this gives them a chance to lower their tax liability through deductions. They may set up donor-advised funds or charitable remainder trusts, allowing them to donate assets while receiving tax benefits. In some cases, they use appreciated assets like stock or real estate for their charitable donations, allowing them to avoid capital gains taxes while still supporting causes they care about. 6. They use business deductions. Many wealthy individuals own businesses, and this allows them to take advantage of a wide range of tax deductions that are not available to regular employees. Business owners can deduct expenses such as office supplies, employee salaries, travel costs, and even the costs of running their homes if they are used for business purposes. Additionally, they may be able to take advantage of various tax credits for research and development or energy-efficient investments, further reducing their tax liabilities. 7. They benefit from tax loopholes. Rich individuals often have the resources to hire tax professionals who can help them identify and take advantage of tax loopholes. These loopholes are legal ways to reduce taxes, such as using certain types of deductions or taking advantage of tax credits that the average person might not know about. Wealthy individuals typically know where to look for these loopholes and can structure their income in ways that minimize their tax burden. 8. They plan for estate taxes. Wealthy individuals are often proactive in planning for estate taxes, which can be a significant financial burden when passing on wealth to future generations. They may use trusts, life insurance policies, and other estate planning tools to ensure that their heirs receive as much of their inheritance as possible while minimizing taxes. By utilizing strategies like gifting assets before death, they can reduce the taxable value of their estate and avoid a hefty estate tax bill. 9. They invest in tax-deferred growth vehicles. In addition to 401ks and IRAs, rich people often invest in other tax-deferred growth vehicles, such as annuities or certain types of real estate. These investments allow their money to grow without being taxed until they begin drawing income from them. By holding these assets long-term, they can let their investments compound without the impact of taxes, ultimately maximizing their wealth-building potential. 10. They regularly review their tax strategy. One of the most significant things rich people do differently is that they consistently review and adjust their tax strategy. Wealthy individuals work closely with financial advisors, accountants, and tax specialists to ensure that they are using the most effective strategies to minimize taxes. Tax laws change frequently, and the wealthy take the time to stay informed and adjust their strategies accordingly. This proactive approach ensures that they are not caught off guard by new tax regulations and are always in a position to reduce their tax liability. While most people focus on earning more money, the rich understand that reducing their tax liability is just as important for wealth accumulation. Through tax-deferred accounts, tax-efficient investments, charitable giving, and careful planning, the wealthy are able to significantly lower their tax bills while growing their wealth. By adopting some of these strategies, you can start making smarter tax decisions and build a more secure financial future. Remember, taxes don't have to be a burden. They can be a tool for financial growth when managed strategically.